Okay, welcome everyone. Can everyone hear me?
Yes.
All righty.
Yes, we can.
Okay, if we can stop this screen for just a moment.
Okay.
Um,
Mm,
Stop share.
I don't see that. Ah, here it
Okay,
is. Here it is. I found it.
okay. All right, welcome everyone. I see there are other people still joining. We weren't able to get it live. I'm having a little problem putting it live, but we'll run it live later. That's what we'll do. But I want to welcome everyone. Thank you for being on time as we start this phenomenal seminar. I'm Darlene Turner. I am the president and co-founder of the Liberty International Network, and we are a network of churches, ministries, businesses, and individuals that are dedicated to the love of Christ and his power to be demonstrated in the, not just through ministry though, in the municipalities and the marketplace, to also help all of those who are endeavoring to live a higher quality of life, to do that in every way and to prosper, not just spiritually, but also financially, relationally, and civically, and in every way. So I'm so excited about this seminar. And so we're going to get right to it. And thank you for taking time out on your busy Saturday, but it is going to be well worth it. So let me tell you a little bit about your presenters for today. All right. I'm going to read some of their bio, a brief portion, because I know it doesn't encompass everything that they have accomplished. But let me tell you about the two presenters today. Um, okay, Emily.
Hmm. Oh, now you want me to go ahead and present? Share screen?
Yes,
Okay.
yes. One of the presenters, Rick Panlilio, I've known for, we figured out, over 37 years. I know you think we're just 40 years old, so we met at 3, right? But
Yeah.
not quite. So, and then I had the privilege of recently meeting Emily Maybrook. And so let me first tell you a little bit about her. Okay, so Emily, if you could put that on the middle screen, please.
I think it's on.
No,
No,
next slide.
no, you have to click on the next slide with your bio, so I can read it. It's on the home, on the main slide right now.
Ah, okay. Hang on. I had to hit home show. I mean the home.
Okay.
There
Okay,
you go.
there it
Yes.
is.
All right. Okay,
We're
so
gonna, we're gonna get better at this.
is it
Yeah.
ex- Emily is an experienced mortgage lender of 28 years, dedicated to help make your home ownership dreams come to a reality. She has a passion for guiding home buyers through the lending process. She takes pride in providing the best service, practical knowledge, and transparency. So whether you're ready to work on your dreams now or just planning for your future, Emily is a knowledgeable resource committed to achieving your financial goals. She's licensed in 7 states, and she brings expertise backed by a bachelor's degree in economics and a lifelong commitment to learning. And next, a little bit about Rick Panlilio, my longtime friend. He is a real estate sales professional with Compass Real Estate, who helps his clients find the right home that fits their budget and goals. He's a member of the top 1% sales producer with the Rizzo Group in Chicagoland. For over 10 years, Rick has navigated the rent-to-own landscape in the greater Chicago area with remarkable success. His insights will prove invaluable as he guides you with knowledge on how to avoid the common pitfalls and maximize your chances of success. He will provide an in-depth comparison of Homebuyer Alley's offering against other competitors, empowering you to make an informed decision that aligns with your unique needs and aspirations. So I want you to first, we're going to welcome both of them, but we're going to begin with Emily May Brooke. Emily, take the stage.
All right. Thank you. How's everyone doing? Happy Saturday and good afternoon, everyone. Can you guys see the screen
Yes.
properly? Okay, great. So as I was meeting with Darlene, I was explaining to her a little bit about my passion. My passion is not just in finding a home or helping somebody find a home or financing their home, but that also my passion is educating people. Education is a common goal that we all have here in this room, because when you have more knowledge about the ways and means and how to obtain financing for your dream home, we empower everybody. So that's what we're going to try to accomplish today. And I wanted to also recognize one of our guests as well in the audience is one of my team member, William Chu. William is been in the business for 20 years, and between me and Rick and William, we have a combination of a lot of knowledge with regard to how help home buyers um, navigate through the complexity of financing. So I was presenting to Darlene that our Homebuyer Ally is a program that you've never probably have never heard of in the market out there, but it is synonymous to what we call a rent-to-own program. So what is a Homebuyer Ally? Homebuyer Ally is basically a means for you to own a home using a rent-to-own program. So what that means is our company, I work actually for Premier Mortgage Resources, and we partner up with a nonprofit organization called Homebuyer Ally. And that nonprofit organization purchases a home for a program participant. So let's say you you are looking to own a home, yet you're not quite qualified yet to own a home using a regular financing program out there. Then you will try to qualify with Homebuyer Ally and do a long-term lease option to buy that particular property. We're going to go into a little bit more detail of how the program works later on, but this is a little bit of just kind of an overview, just to kind of show you 30,000 feet overview of how the program works, and then we go deep dive into it as the next slides comes along. Um, the long-term lease option to buy the property that you like to purchase, you're going to rent it for 10 years. You have up to 10 years to rent that place. And while you're in there renting the place, you're earning equity. And at the same time, we're also helping you qualify for the program for the financing, a regular financing, so that before the 10 years is up, you will be able to buy that home with the equity built into it. Who could benefit from Home Buyer Ally? Um, part of part of the programs that we have is our goal is to open it to a lot of different demographics, different people who needs a home. We have a program for ITIN borrowers, and they can use as little as 3.5% down. As you know, I don't know if you guys are aware that ITIN borrowers, they need to have a large down payment of at least 10% down in any traditional programs out there that's available. And if they don't have that 10% down, they really can't purchase a home, and it would take them a lot longer to rent. without any equity. So Home Buyer Ally program will allow them to do that with as little as 3.5% down. It's also good for borrowers who had recently been denied, whose income just changed. For example, commission going from a base salary to a commission income. You know that that would
Excuse me, Mia.
require. Uh-huh.
Can you move the slides also? So that,
Oh, okay. I'm in. Oh, you're not seeing the
no,
slides. Is not okay. I'll
no,
have to just um
okay.
the recently denied borrowers sometimes could be from somebody who lost their job and then they have a big gap in employment, or coming from a commission to from a base salary to a commission. And then when you have commission income, whether it be a 1099 or self-employment, you need 2 years of history on it. But with just a 3 months bank statements, we could show income, and we can try to qualify for an HBA. Um, Also, our Homebuyer Ally program is good for credit challenge borrowers because we allow as low as 580 credit score, and by borrowers who has 1 day out of bankruptcy, discharge, or foreclosure. So we're going to go into detail about all of this as you guys qualify for Homebuyer Ally. The goal for this webinar right now is to give you a high level overview of how the program works. And can you guys see the screen now where, okay. So how does Home Buyer Ally program works? So basically, you as a participant, or this time borrower, we don't know yet whether you could qualify for a home loan, right? But you know there is a way by using Home Buyer Ally. So the best thing to do is you go ahead and do a pre-application or a pre-qualification application through our online application link. And then we would determine whether you qualify for a regular loan, or if not, then we would push through the Home Buyer Ally program. Then once you're pre-approved, and it takes about from the day that you've participated in the program, submitted all your documents that we need, which we're going to go into detail once we have our one-on-ones. It takes at least a minimum of 3 days pre-approval time frame. And depending on your situation, if you don't have a lot of conditions, it could be just the 3 day time. Participants then will shop for a home with realtor. So Rick would then start looking for a home for you. And when that home fits the guidelines or fits what you're looking for, could write a contract with a written contract, making our nonprofit as the buyer, not you as the participant, because you are the renter. The contract would then be written with our nonprofit as a buyer, and it would be the Home Buyer Ally. And then your realtor will negotiate up to 6% seller credit that would be required so that we can cover closing costs, buy downs, and your prepaids. Prepaids meaning some tax and insurance in advance. And then it takes about approximately 45 days for the whole process from beginning to end, from the time that your offer is accepted. So it's not your regular typical 30-day escrow. So we just want to get that extra 15 days in there so that we don't run into some problems. And then when the transaction closes, all parties are paid. The realtors in this situation will get paid their commission, and then you as a participant will enter into a lease program with Homebuyer Ally. And once the loan closes, the lease starts on day one from the time you get the keys. From the time Homebuyer Ally closes the loan and get the keys to the property, and then you can start to move in. Now I want to mention a little bit about how does the lease program works. Um, The terms of the lease requires a minimum 3.5% down as a form of a down payment. It actually acts like a security deposit for you as a participant with Homebuyer Ally. This 3.5% down could also come from gifts, and it's allowed 100% of the 3.5% down could come from a gift from a family member. And if ever your loan or your qualification requires reserves, we cannot use that as a reserves, however, but you can use 401k or any other existing savings account that you have.
Emily,
Mm-hmm.
can you click on the slide 7 that coincides with where you're speaking?
Okay. Is that not working? Is that working? Can you see it?
Yes, we can see it.
Okay. So for some reason, it's not synchronizing here for me.
Yeah, you have to click on it as you go through it. Or is it the one above that?
Yeah, because the one I'm clicking is the one in front of me, and I thought that's the right slides.
Okay.
Okay, so we're here now. Everybody's here, right? Can
Yes.
you all see it? Okay.
Yes.
All right. So you have 10 years to assume the loan or purchase the home. And majority of the time we would encourage you to qualify for your own home loan and not to assume the loan, because then you'll be able to negotiate your own interest rate when you purchase that particular home within that 10-year period. But for some reason, if you need an extension, we would allow up to 5-year extension on a case by case basis to a total term of about 15 years. Then while you're renting the property, all the repairs and expenses for the home will be paid by the tenant, would be you as a participant. That home is going to be yours, so all the repairs and expenses will be paid by you. Next slide. So we have a specific example. Right now, for example, we have a participant qualifies for 350,000 lease option. In the contract, if it's accepted for 350,000 with full asking offer, the 6% seller concessions could be up to 21,000. If for some reason the seller does not approve a full 6%, you can ask for whatever the seller can be approved for, and the difference would be allowed for the participant to pay. The total down payment is 3.5% down, which is about 12,250. And the total monthly payment for the program participant in this example, this is a live example that we're giving you guys. So each of the monthly payment is not fixed. It all depends on the property, taxes, the area, and the interest rate at the time of the application. So for example, on that specific program, for this specific example, this is the payment breakdown on this property. Principal and interest is 2581. The insurance, like I mentioned earlier, it could vary between home. Property taxes in this particular situation is 242 a month. The mortgage insurance is there. And then there's a small little fee. It's kind of like an admin fee for the lease option to buy program, which makes your total payment of about 3186.79. This amount represents your lease for that specific property. This is just one of the example, as I mentioned. Did you guys see that payment, or was I too late?
We can see it.
Okay. So a lot of the questions that we have out there is, how is the purchase price configured when it's time for the borrower or the participant to purchase the home? We have a really good example for that. The way our rent-to-own program is different is that while you're renting it, it actually accumulates equity for you. And the way we do it is we will give you an amortization schedule based on a 40-year mortgage. For example, on that particular 350,000 example that we showed you, we are assuming, let's say this borrower or participant wants to go ahead and purchase the home on month 18. So even though you have 10 years to rent this place and accumulate and make that decision up to 10 years, when you're ready in month 12 or month 18, wherever or whatever, whenever the case may be, you are welcome to purchase this property, and you will know exactly how much you need to purchase it for and how much you qualify for. So in this case, on month 18, this participant would be able to pay off what they owe with Homebuyer Ally for 339,722.50, and their down payment of 3.5% from the beginning will all be included as a part of their cash to close. Any questions on that respect? This would be a good time to get some feedback from you guys if you have any questions.
Alan Harris had her hand up in the chat.
Fallon?
No, she was just holding her hand up for the question, or who this could benefit. If anybody
Oh,
has a
okay.
question, just unmute and ask your question, or put it in the chat.
Yes.
Sorry about that. Okay.
So what's the part? Okay, so for month 18, it says option price 333,000, and then it says FHA balance is 339 thousand. So what's the difference between those two amounts?
Are you referring to the 339,722.50?
Yeah. Yeah,
Okay.
that versus the option price over there, which is lower than the FHA.
Okay. That is actually the 339,722 is your payoff. And this right here, the 343,660 is what you're asking?
I'm asking about the option price. The last amount in the row of month 18, the 333.7. Yeah, right there.
Okay. $343, $339. That is a good question. I don't know why that one is. I think the FHA, if the loan is an FHA loan, then that would be your balance. And I believe this one would be um I think that is with with the mortgage insurance. That's why it's a little bit higher.
Mhm.
Do you know the answer to that, Bill? I know that Bill has
Hi, this is John Wesley.
okay.
I'm sorry. I let the other gentleman talk, but I think you hit the nail right on the head. I think it's different because with FHA you have the mortgage premium included in that. So that
Correct.
makes it higher. Over.
Oh, okay. Okay, thank you.
Uh,
But now if you
Yeah.
pay 20% into that drops off, right? If you were to give that up, right?
correct. If the home buyer ally has when home buyer ally purchased the property, they use an FHA loan, and the mortgage insurance is paid upfront. It's financed upfront into the property, and so part of your payoff would include that mortgage insurance. If for some reason they qualify as a conventional loan, then and you use 20% down, then you wouldn't have the mortgage insurance. And that's going to get addressed with home buyer ally if that is the case. But the chances of 20% down happening on the rent to own program is not highly likely, but it could be a possibility depending on the borrower if they want to use 20% down. Does that address that question, Bill, if I'm right? Or
Yeah, you're correct. The difference between those two numbers has to do with the fact that in this example, the participant is choosing to somewhat quickly purchase the property after being in this lease program for 18 months. So the spread of that number, because the assumption here is the participant is going to use FHA financing to buy the property, him or herself, that spread of the number is for that one-time FHA premium.
Oh, okay, I understand.
Okay,
Thank you.
you're welcome.
you're welcome. Any other questions before we move on?
Yes, I had a question.
Sure.
So at what point, again, just from my understanding, as far as the PMI,
Mm-hmm.
is there, would there ever be a time where you can choose the insurance provider, or that's automatically provided?
For the PMI,
Right.
for the PMI, it would be home buyer ally that chooses the PMI provider. But if you were to purchase it, there's two kinds of insurance when you purchase this.
Right.
When you do home buyer ally and purchase the property, you have the mortgage insurance and then you have the home insurance. The home insurance you can choose, but the private
Okay.
mortgage insurance or the mortgage insurance premium for an FHA loan is something that we cannot choose. It's lender chooses that, or home buyer ally chooses that with their lender. Does that answer the question?
Yes, it does. Thank you. And then I had
Okay.
another part to that. So at what point do you get to, again, just for clarity, what point do you get to option out of the PMI? Is that after the 20% is paid again? I'm just trying to understand that part.
Right. If you are still in your lease, let's say you're still within that 10-year program, you wouldn't be able to remove the PMI until you actually purchase the property using either FHA loan or conventional loan. So if you, let's say in this example right here, at 18 months, you choose, we help you get your credit score higher, and you now have saved up about 20% down payment. You got a 3.5% already embedded into your lease option program, right? So you got an additional 17% down payment, and you say, hey, Emily, I would like to go ahead and purchase my home now from Home Buyer Ally. Then you call me, we get you pre-qualified for this time a conventional loan because you have the 20% down. Your 3.5% down is a part of that 20% down. Then you will qualify for the conventional loan. So assuming you don't have the 20% down, you have 15% down or 10% down, for example, but you want to go ahead and purchase the home in 18 months, your payoff would be 339,722.50. And then as you pay your mortgage, once you purchase the home from Home Buyer Ally, you pay off the Home Buyer Ally, and then your name now is in the title of the property and you have your own mortgage for conventional loan. Once you have accumulated 20% equity on that home, you can get rid of your mortgage insurance. That's the
Okay,
only time that you can do that.
all right. Thank you for
Okay.
that clarity. Appreciate it.
You're welcome. So
Okay,
we
can I
will
just
have, go ahead. Is there another question?
Yes, ma'am.
Sure.
Just referencing the payments, if I wanted to actually accelerate my payments, is that possible?
If you can you repeat the question again, please?
If I want to make my month one, my payment right now, it's a little small, but like
Mhm.
$3,200. If I want to pay $6,400, if I want to accelerate it, is it possible that I can do that within the lease terms?
Now, as far I will double check this, but as far as I'm concerned, but as far as I know, I don't think that you can change and adjust the amortization schedule once you start signing your paperwork. The only time that you can do that would be is if you own the mortgage or when you have finally assume or purchase the home and then get your own mortgage, then you can pay it down so that you can have a much bigger um equity. Does that make sense?
Okay, and then what's the interest rate on it? I'm not able to calculate it real quick. I don't really feel like doing it, but I
Well,
see you guys give a credit of 5.7. It looks like a average about
on
5.7
this
every
in
payment.
this particular program, we were not informed about exactly what the interest rate is on this particular program because it depends on the credit score of the borrower. It depends on the credit score that determines what homebuyer ally would qualify for the loan that they would take on your behalf. So I believe in this particular program, the interest rate, because of the nature of how this was created, was, I think on this particular program, the rate was 8.25. And considering interest rates are higher now, as well.
But keep in mind, some of that closing cost credit, the reason we're asking for that is so we can pay down the rate.
Yes, they could also use it to buy down the rate and pay for the closing cost. So basically, the home buyer ally is like an entity, kind of like your proxy, to qualify for the loan on your behalf, but the closing cost, the down payment, is either provided by you or the seller in order to make everything work.
Can I ask a question?
Um, okay, yes, we can take one more question before we move on. And then we can have another session towards the end to also ask more questions as well.
Okay, thank you. First of all, I think this is a great program for those people that qualify for it. The question I have is, who assumes does home buyer ally assume 100% of the risk of, let's just say, using the scenario that you presented, and in month 18 or whatever, or 20 or 24 or whatever, the lessee decides that they're ready to purchase, and let's just say for all practical purposes, home buyer ally bought it for $350, but for whatever reason, when the renter is ready to purchase, the value goes down. So in that case, how is that carried out? Would home buyer ally take the full hit on that, or is that some way passed on to the candidate who's trying to purchase it? and how?
Now, we haven't come across that situation yet, but I did bring this to our CEO's attention. And according to him, that the specific amount, for example, this is your payoff. If this is your payoff, the home buyer ally will require for that to be paid regardless of the value of the property. So I'm assuming that it would be subject to negotiations at that point if that were to happen. But the chances of that happening at this current mortgage or this current market rate right now is kind of less likely. However, that would be something that's subject to negotiation.
So if they could negotiate on it, would the renter at that point be able to walk away from the deal? Or are they
Yes,
still locked into the lease?
you are not locked into you are not locked into the lease. You can walk away from the deal, but you lose all the money that you have in the whole transaction.
Understood. Okay, thank you.
Right.
Emily, could you just mention the other, I just think this is a good time to mention the other part, which is one thing I loved about this program, that if also the value had gone up,
Correct.
that you would get the property at the original rate. So if it went up thousands of dollars, especially if you waited 10 years to buy the property, you still get it at the cost that it was originally.
Correct. So, which Rick will point out later on, will
Okay.
mention about the story that he has with his client, where some other programs out there that are rent to own actually adds value to the property or adds a cost of appreciation to the property, so that by the time that you buy it, the property is going to be worth more than what you've originally purchased it. So in this case, our program, it's locked in at 350,000. Whenever you purchase it, you already know what your payoff, so that you can already see what your equity is. Every month that you're getting, as you can see in this particular examples here, you'll see the tenant credit. You're gonna get everything in your amortization schedule, so that you can see exactly how much money you need to prepare on a certain month or years that you're going to purchase the property from Homebuyer Ally. Homebuyer Ally created the program in order to answer the affordability problem. They are not there to accumulate properties so that they can, earn money and just create equity on properties. They want you to build equity so that you can become a homeowner. That's the main goal of Homebuyer Ally. That's why they're called a nonprofit organization. So I think in that respect, we can go ahead and move on. I gave you guys an example for the 350,000, but here's just an overview of what monthly payments are like on certain price range. So in Homebuyer Ally is offered throughout all 49 states that Premier Mortgage Resources is licensed. We are in the process of getting licensed in New York, and so that's why we are still in 49 states. I am licensed in 7 states. However, I can still help you facilitate through the Homebuyer Ally, because once we determine, let's say I can't qualify for a regular mortgage, I'm going to need the Homebuyer Ally rent to own program. Your loan officer does not become me. I'm just your facilitator by that time. And we have one person in Homebuyer Ally that's licensed in all 49 states that will be working alongside me. So you get 2 loan officers for the price of one, basically. So we can help you in whatever state you're in, except New York right now. But once we get licensed in New York, I'll let you guys know. What I think is very interesting here in Chicago, we're pretty much, if you're gonna use FHA loan, we're pretty much, we could go as high as the 500,000 range. So if you really think about it, you're gonna be looking at probably at least in the between 4,000 to 5,000 rental if you're gonna go up that 500,000 range. So this is just an example of what we've been dealing with as far as monthly payment wise. Unfortunately, we can't show you the mortgage, the home insurance here, because actually that would be your own choice. So anything that we indicated here, principal and interest, estimated taxes could also change depending on the area that you're going to be buying in Chicago. We don't have geographical restrictions on the area for this program, which is another benefit, and Rick will talk about that later. Okay, so this is probably going to be very interesting part for you guys to think about. This is what we do to qualify you. And in terms of credit score, you just need 580 minimum credit score on an FHA loan. And if for some reason your credit score is a little bit lower than that, we also do a case by case exception. It all depends on the situation. And we as loan officers, we will help you what are the things that we can do in order to either increase your credit score or obtain an exception. One thing you wanted to mention is that there should be no recent delinquency. When we say no recent delinquency, would be within the last 12 months. So for example, if somebody is currently going through bankruptcy right now and it hasn't been discharged yet, that's considered a recent delinquency. If for example, the foreclosure is happening right now and you're still in that period where you're still in the property and you're still late payments going on, those are considered recent delinquencies. Once the bankruptcy is discharged on Chapter 7 or Chapter 13, you need to have 12 months of continuous payment on a Chapter 13, and those will then be able to qualify you after the 12 months payment history on a Chapter 13. I don't want to go into so much detail on how the credit is right now because I'd like to reserve that time for a one-on-one once you guys want to go ahead and take the next step in talking to us. And the most important thing here is that the 3 months reserve sometimes is required if your debt to income ratio is too high, or there should be, if we're going to be asking for some kind of an exception in terms of either credit score or any other situation on your loan file. So sometimes we don't, on certain cases where the debt to income ratio is really low, sometimes the reserves are not required, but reserves is good because we want to make sure that you're not going to have a big surprise when you finally own the home or when you finally move into the home for this lease payment. We want to make sure that you're going to be able to make your lease payment on time. The monthly payment would be the full PITI and FHA mortgage insurance and HOA. And then 3 months reserves is required. 3 months of current bank statements is what we use for any self-employed borrowers or anybody that's on commission. We can use 3 months of current bank statements, and we can use the deposits as a part of income. We also look at your average income deposit, and we use that to qualify. So I think at this point, I want to go ahead and open the discussion and invite my friend Rick to discuss about his experience with rent to own program. And this is This is really, all of this stuff that we've been sharing, these are all technical information. However, Rick has the goods when it comes to experience. And I want to go ahead and open the floor to you, Rick.
Thank you, Emily. Good afternoon, everybody, and thanks for being on this seminar. My name is Rick Panlilio again. I'm with Compass Real Estate. I've been licensed since 2002, but even back in the 80s, I was already investing in real estate when I happened to work for corporate America, and I was blessed to meet Darlene at that time. And then, so during this time, when I became licensed, I've always helped clients navigate through the real estate market, residential, commercial, investments, assignment of contracts, those sort of things. And then, of course, in the 2000, I was also involved in rental home, but there was no programs back then. It was just a pure rental home, traditional rental home, where you would try to look for a property and negotiate with a landlord or an owner, hoping that they would, they would be open to something like that. But it wasn't very simple. All right, so because you had to find a landlord and that was willing to do that sort of thing. And then back in about 10 years or so ago, there was a program that was started, and another company, with an actual program with a company that I was involved with, and it was pretty good, but it had a lot of limitations. And some of the limitations were they were limited in the areas that you could purchase. Number one. Number two, like Emily was mentioning earlier, they had a built-in schedule so that the price would go up every year. You had up to 5 years to exercise the option to purchase the property, but then it would go up by a certain percent every year. So the question earlier, and also the rental was the same thing. So you did know what the monthly payments were going to be and how much you were going to purchase the property for. But what the question earlier was, what if the property was actually worth less than what that purchase price was going to be? That was the problem with that program. You had to purchase the property at that price. So, Homebuyer Ally rental home program is the best program that I've ever been involved with, I've ever seen. And a few examples of that is because, again, like Emily was saying earlier, even if when the price goes up on the property, all that equity that's built in the home is yours, because you're going to purchase it still based on what is owed on the property. All right. Your monthly payments will stay the same, other than when your taxes will go up. So you know what your monthly payment is going to be for the next 10 years if you're going to stay in the home for 10 years before you even exercise the option to purchase. The other good thing about it too is there's no limitation in the area where you can buy. You can buy anywhere that as long as the property is FHA approved. All right. So that could be a single family home, obviously, without any issues with, any renovations that have to be done. We can do also townhomes and condominiums. So that was another good thing. And I see that Tara is also on the conference. And I spoke with Tara not too long ago, and I got really excited because this is what I also like about this program. You can do this program on a 2-unit. Just think about that. You can do this on a 2-unit. All right. So it has to be owner occupied, obviously. And then when you finally have the option to purchase the property, you purchase the property, and now you become a landlord. You can become a landlord now. And then after 1 year of owning their property, because that's all they need to be an owner occupied, to have an owner occupied mortgage, then you can buy another property, and then suddenly you have a 2-unit. Well, what are the best ways to become an investor using this program? But obviously, this program was set up for people so that they can avail of being a homeowner. All right. I was talking to somebody not too long ago, and they said, Rick, I make this much money, but my credit is shot. And I said, perfect. This is a perfect program for you. And so when I say this is the best program that I've ever been involved with, I've ever seen, it's amazing. Another question was also about, the 3.5% down. Would you lose that money if you don't if you decide not to purchase the property. This is what you call a non-traditional way of, sorry, traditional way of doing a rent to own. It's called like an option fee. You know, back then that's what they call it, an option fee. And if you didn't exercise the option to purchase the home, then obviously you would lose that. But even with that, Home Buyers Ally, I still took everything, all the best of everything, and combined it into one program. So very excited about it. And hopefully, you know, we can help a lot of people.
Great. Thanks, Rick. Is there any other questions in the chat? For some reason, I have no access to the chat right now.
I did have another question based on
Sure.
what Rick just said.
Okay.
What if you have a situation where you have it was a 2-unit property, but there was an added ADU, like within the last year.
Okay.
Would that property still qualify, or is it just restricted at the 2-unit?
It depends if the ADU where is gonna be if the ADU is a part of the 2-unit, or does that create it as a 3-unit? If it's more than 2-unit, it would not be qualified. But as long as it's still considered a 2-unit and the ADU is compliant within the property to be still considered a 2-unit, we can still use that. We probably won't be able to use the income from the ADU as a part of it qualifying, because it
Right.
has to be income, it has to be owner occupied, while the Home Buyer Ally is qualifying for a loan on your behalf. Then in that case, as long as the ADU is compliant with the code and it's still considered a 2-unit, we can still use those. So also I want to mention that this is not for property that requires a 203K or a rehab or fix or flip. We can't do any fixing on the property. If it needs to be fixed, it needs to be fixed before closing. So I've done a lot of loans as well that requires 203K or a rehabilitation loan. You can't combine those with this program. So on any property that you would be purchasing, Home Buyer Ally, as the buyer, will have to require the seller to fix some repairs that needed to be done in order to fit the FHA guidelines.
Yeah, great program. Thank you.
Oh, and I see Latifa Williams is raising her hand. Go ahead, Latifa.
Hi, yes, I was wondering, can you apply with the co-applicant, like a
Absolutely.
parent? Okay.
Correct.
Okay.
Yes. Family, if mom and dad wants to go ahead and, be a non-occupant co-borrower, that's allowed on an FHA loan. And but they will have to double check to see if Homebuyer Ally will require them to be living in the property if they are a co-borrower.
Mhm.
We'll have to let me get back with you on that one. Would you put your email on the chat so that I can
Yeah.
get back with you on that?
Okay, yes, thank you.
Also, one of the other things that we have done is you guys will have a copy of this presentation by clicking on this QR code, so that whatever you miss writing down, you can have a copy of it. So in this QR code, it would lead you to a link, and you can also complete a form to set an appointment for both Rick and myself to go ahead and go over some of your other questions that you might forgot to ask.
Rashida also
I-
has her hand up.
I
for shaking
think,
the issue.
thank you, Mr. Rick and Emily. I think you kind of tapped in what my question was. My question was actually to get started with the process. What would be the next steps? Like, will we be on a Zoom call like this? Since I'm in Florida, I'm not in Chicago currently. Born and raised in Chicago, but I'm down in Florida. So would it still just be, what do you say, an email? What would be the process to, will we talk to both of you all at once?
You would
Or how
you
does that
would
work?
be so the first step would be is Rick and I partner together with all this, and the first step would be to get pre-qualified. So with that link, it'll give you a form that you can enter your information. You put your contact information in your email, and then I will be setting up a phone call with you to start discussing about your situation. And then once we're ready to go ahead and move forward to the next step, I will send you a link, which is also in that that link is like my Linktree website. It also has an online application there. So let's say we discuss your situation and we determine that the rent to own would be a good program for you. We still require you to do a full loan application online because the guidelines requires that we only offer rent to own for home buyers or participant that cannot qualify for a regular loan right now. If during our discussion we find out that, oh my gosh, you can actually qualify, because a lot of people that we have talked to, Rick and I have discussed this with a lot of people, and they thought, oh my gosh, I can't qualify, I need this rent to own. After talking to them, we actually could help them. We were able to raise their credit score, find them a down payment assistance program. Um, if you qualify for a regular loan right now, we can help you find a down payment assistance program and get you to just buy a home with just a regular FHA loan with the down payment assistance.
Okay.
So you will open a whole lot of opportunities and resources for you by just talking to us. And we are just basically here to open our to open our services for you so that you can find out more about what it takes to be a homeowner. And why do you want to be a homeowner? Because being a homeowner builds equity and builds your financial stability. It builds wealth for you. I will give you guys an example that last year I helped a single mother qualify for a home loan. She was qualified at 150,000. But for some reason, she decided, oh, I'm gonna continue renting. I'm gonna save up money. Next year I'm gonna have $20,000 to, to put down. Now next year is now, and the house that she wants to buy is now worth about 230,000. If she had bought it at 150,000 last year with just the down payment assistance, it would have been 3.5% down, like around less than $5,000. She would have owned the property. She would have built equity. She would have made $80,000 worth of equity on that house with a minimum down payment that we would have been able to help her. I give that as an example of how you build wealth through home ownership. And I believe that God gives us the resources so that we can be more aware of what we can do and make the right choice and the right decisions for our future. And that's why we're here for. So with that being said, I would like to
Thank you so much.
I would like to thank you guys for the time that you have allowed us to share our expertise, our knowledge with you. And here's the information, our contact numbers for Rick and I and myself. And also, I would like to encourage you to go ahead and click this QR code so that you can get a copy of this presentation and fill out the form for us to contact you and take the next step. towards becoming a homeowner, towards being able to attain your dream, whether it be today or tomorrow, we're here to help you. Thank you so much.
Thank you so much, Rick and Emily. Just making sure, are there any final questions before we end? Again, please take a picture of that QR code. I'd love for you, and most of you here are from our LIN family, but those of you who may have gotten on from Facebook, please make sure that we have your email address so we can contact you. So if you did not register by texting Dream Home or New Home or on Eventbrite, please put your email in the chat so we can keep you informed on the future things concerning this. I want to just give them a minute. I don't see any questions yet. All right, let me know if this was something, LIN particularly, that you all would like to see more of. Okay, so Joyce. All right, thank you, Joyce.
Yes, this was really, really good, Apostle. Really, really good.
Thank you. Who was that was talking? I
This
couldn't
is
see who
Kimberly.
was talking. Kimberly, okay. All right, thank you. And you all spread the word about this phenomenal program that's available in 49 states, because our goal is to see everyone own a home that desires to.
Oh,
Own.
Darlene, there is a question from Kayla that
Okay.
I see on the
Kayla?
chat. Are you still here, Kayla?
Yes, hi, I'm here.
Hi, Kayla. I'm sorry I didn't see that. So your question is it possible to pay between 1,900 to 2,100 monthly for the rent to own option, or would everything be around 3,000 monthly? The answer is yes. For example, my colleague, team member here, William, actually has a client that is purchasing something between around the 2,000 price, 2,000 monthly, or I think it was 2,200 bill, correct?
Correct, correct. So in what you saw today, it was simply an example. The figures that you saw, it was simply an example based on a $350,000 value property. If there's something in your location that that fits for you, works for you, that's much less, then yes, those numbers will move downward to benefit you.
Does it vary based on where you are, your location, like
Yes,
state?
yes, it does.
Okay, and do you guys have comparatives for different areas?
I think Rick, with his network of peers, can certainly give you a sense of what the figures look like.
Okay.
Thank you. Because
Thank
I know
you.
I'm in Orlando, so I'd be interested.
So am I.
Oh,
Yeah.
okay.
We can help you in Orlando, not a problem at all.
Yes.
Actually,
Okay.
all of
Thank
us,
you.
me, Latifah, we're all in Orlando.
I am licensed in Florida.
Okay,
So
great.
we
Yeah.
I'm actually helping somebody right now in Florida, but it's a VA loan, so he qualifies for a regular VA loan. And the taxes in Florida is so much cheaper than Illinois, as you all know. So you will definitely have a much better um, choices there with regard to lowering your monthly payment or your lease, because of the tax and the taxes are cheaper. However, the insurance is something that is a little bit higher in Florida. I was just encountering that situation with this one home buyer that I have right now. But there are still areas that in Florida that are going to be very competitive. So
So
actually,
if
I have some insurance companies that I could refer to you guys. Go ahead.
If you are a realtor, how can you become involved with the program on that aspect also?
Yes.
Absolutely.
Yeah,
I'm gonna let Rick answer that.
Compass has many offices throughout the country. So we're a nationwide company, and I can always find a really good realtor for you. For example, I do have a good realtor partner in Miami. I know it's not Orlando, but we can, I can tap into my network of contacts, and we can help you with that. Not a problem.
Okay, so if I put my email in the chat, you can reach out to me with information like that?
Sure, absolutely.
Okay, thank you.
Hey, Rick, but what if you have your own realtor already that you've been working with? How can I hand them off to you or vice versa? How does that work? How do they get vetted into the deal?
Hi, Rick. He's working with me.
Yeah,
Oh,
Tara.
there you go. All right, Tara. Absolutely. No, I'm working. We're going to work closely with Tara on that. Just got to get you, qualified to the program.
Okay, thanks. I'll be working closely with Tara.
Right.
I'm going to get you, Pastor.
Yeah, I got Tara excited. I told you the last time.
Well,
Rick, I think it's a good time though, before we leave that if they know any realtors, right, in terms of we are opening up training for this program. Could you mention that, Rick?
Say it again, please. I'm sorry. I was writing down.
About the fact that if they know realtors, that we are offering that program across the country for people who they may know that are realtors.
That's correct. I will obviously work with those realtors, quote unquote, train them to the process, give them my experience in the rental home program. And the realtor, here's the thing about it, like I was telling Tara, and even what Emily had mentioned, this opens up a lot of doors because when you talk to people about this, they might not even realize that they can actually afford to buy a home. So you went from maybe having, a handful of clients to having more clients now because you got your foot in the door, all right? So anyway, with those individuals that do qualify for this program, I would be involved in that. But the individuals who just qualify the normal way, then that would be Emily and whoever else their loan officer that they want to use, I guess, for that program. But for this rent to own, I will be involved, and the team will be involved in it. So that's what we'll be there. So
yeah, just to clarify on that respect, the goal is always to work towards what's the best interest of the borrower or the participant. And if you qualify for a regular loan, you will get pre-qualified with Premier first. And then you don't need the rent to own, your realtor can just then find you a house and be able to sell you a home. But if they need the rent to own program, am I correct, Rick?
Yes.
That you will train them because it takes there's so many fine details that a realtor needs to know in order to create a purchase agreement and deal with the sellers, explain to the sellers how the program works, and all those things require a lot of training from Rick.
Mm-hmm. Did you guys put that screen up again that had your information on it? Both you guys' information on it?
Sure.
Yeah, share the screen. Thanks.
Yep.
I have one quick question. I'm sorry.
Mm-hmm.
For the people that are already realtors, I'm sure you're working with them. Do you have programs set in place for people that are interested in getting their real estate license to connect with the rent to own program? Or is that something off the record, not affiliated with this?
Rick?
Well, you would have to take your license, obviously, if you want to be involved in this. Yeah, you have to be a licensed realtor. And I'm licensed in Illinois. And again, I can work with another licensed broker in another state. That's not a problem. I do that. I've done that many times. in
Mhm.
California, in Arizona, and then locally here, Wisconsin, Indiana. That's not a problem at all.
Okay, thank you.
Okay.
Okay. Well, if that's it, we don't want to take up any more of your time this afternoon. I hope that everyone has been sincerely blessed by this presentation. And we look forward to each and every one of you becoming homeowners. Have a great evening, and thanks again for joining us.
Thank you,
Thank you,
everyone.
guys.
Thank you. Thank you
Thank
so
you.
much.